What's up, guys? Today, we're talking about something that could seriously change your future, especially if you're just starting out. How to invest $500 if I were 18 today. I'm going to give you a full, beginner-friendly, step-by-step guide to growing that money smartly and avoiding the common mistakes. No hype, no get-rich-quick schemes. Just real talk for real results. First things first, if you're thinking about investing $500, don't just throw it into the stock market without covering your basics. This is Beginner Investing 101. Make sure you have zero high-interest debt and at least a small emergency fund, around $200 to $300. Trust me, skipping this step will only stress you out later. Investing should feel simple, not overwhelming. Next, let's talk accounts. If you want the best way to start investing with little money, pick a platform that doesn't charge crazy fees. If you have earned income, a Roth IRA is the move. It grows tax-free, and future you will seriously thank you. If you're not eligible yet, open a regular brokerage account that offers fractional shares. That means if a stock costs $4,000, you can still invest $50 and own a small piece of it. That's huge when you're starting small. Now here's where most people mess up. They try to pick the next big stock. They chase hype videos. They day trade like they're on Wall Street. At 18, I'd keep it simple, boring, effective. Think low-cost S&P 500 index funds, or ETFs. This spreads your money across hundreds of companies automatically, lowering your risk. Simple beats flashy every time. So here's exactly what I'd do with $500. $400 into a low-cost S&P 500 index fund. $100 into either a total market ETF, or 1 to 2 strong blue-chip companies you believe in long-term. That's it. No guessing, no charts, no panic. This is about building a foundation, not gambling on one stock or meme coin. And here's the real secret. The power isn't in the first $500. It's in consistency. Set up automatic investments, $25 a week or $100 a month. Over time, that snowballs. Ignore the hype. Stay consistent. Let time work for you. That's investing at its core. Now let's talk about mistakes so you don't make them. Don't day trade. Don't buy penny stocks. Don't dump everything into crypto. And don't panic sell when the market drops, because the market will drop. That's normal. The real mistake is selling during the drop. Investing is 10% math and 90% temperament. While your $500 grows slowly, invest in yourself too. Learn high-income skills, get certifications, network, anything that increases your earning power, because if you double your income in your 20s, that changes everything. The best way to start investing with little money isn't just where your money goes, it's increasing how much you can invest over time. Here's the truth. If you invest $500 today and average 8 to 10% annually, that money can double roughly every 7 to 9 years. Now add $100 a month on top of that. That's how you build serious wealth. This strategy isn't exciting, but boring is profitable. Time in the market beats timing the market every single time. At 18, it's tempting to want fast results. Social media makes it worse. Everyone looks rich overnight, but the people who quietly invest early, they win. Treat that $500 like a seed, not a harvest. Compound interest is your best friend, and the habits you build now matter more than the money itself. Quick recap. If I had $500 at 18, here's the plan. Eliminate high-interest debt. Open a Roth IRA or brokerage account. Invest mostly in low-cost index funds. Add money consistently. Avoid emotional decisions. Increase your income over time. Simple. That's how you invest $500 smartly, without gambling it away. All right, that's it for today. If this helped you even a little, hit that like button so the algorithm knows we're building future millionaires out here, and subscribe because we're keeping it real, teaching smart investing, and leveling up your money without the boring Wall Street suits. Stick around, keep investing smart, and I'll see you in the next one. Peace.